Stock market. A stock market, equity market, or share market is the aggregation of buyers and sellers of stocks, also called shares, which represent ownership claims on businesses. These may include securities listed on a public stock exchange, as well as stock that is only traded privately, such as shares of private companies which are sold to investors through equity crowdfunding platforms. Investment is usually made with an investment strategy in mind. Size of the market. The total market capitalization of all publicly traded securities worldwide rose from $2.5 trillion in 1980 to $93.7 trillion at the end of 2021. As of 2016, there are 60 stock exchanges in the world. Of these, there are 16 exchanges with a market capitalization of $1 trillion or more, and they account for 87% of global market capitalization. Apart from the Australian Securities Exchange, these 16 exchanges are all in North America, Europe, or Asia, too. By country, the largest stock markets as of January 2022 are in the United States of America, about 59.9%, followed by Japan, about 6.2%, and United Kingdom, about 3.9%. 3. Importance. Even in the days before perestroika, socialism was never a monolith. Within the communist countries, the spectrum of socialism ranged from the quasi-market, quasi-syndicalist system of Yugoslavia to the centralized totalitarianism of neighboring Albania. One time I asked Professor von Mises, the great expert on the economics of socialism, at what point on this spectrum of statism would he designate a country as socialist or not. At that time, I wasn't sure that any definite criterion existed to make that sort of clear-cut judgment. And so I was pleasantly surprised at the clarity and decisiveness of Mises's answer. A stock market, he answered promptly. A stock market is crucial to the existence of capitalism and private property. For it means that there is a functioning market in the exchange of private titles to the means of production. There can be no genuine private ownership of capital without a stock market. There can be no true socialism if such a market is allowed to exist. Indirect versus direct investment. Indirect investment involves owning shares indirectly, such as via a mutual fund or an exchange-traded fund. Direct investment involves direct ownership of shares. Direct ownership of stock by individuals rose slightly from 17.8% in 1992 to 17.9% in 2007, with the median value of these holdings rising from $14,778 to $17,000,910. Indirect participation in the form of retirement accounts rose from 39.3% in 1992 to 52.6% in 2007, with the median value of these accounts more than doubling from $22,000 to $45,000 in that time. 9.10. Rydqvist, Spisman, and Strebulev attribute the differential growth in direct and indirect holdings to differences in the way each are taxed in the United States. Investments in pension funds and 401ks, the two most common vehicles of indirect participation, are taxed only when funds are withdrawn from the accounts. Conversely, the money used to directly purchase stock is subject to taxation, as are any dividends or capital gains they generate for the holder. In this way, the current tax code incentivizes individuals to invest indirectly. Stock exchange. Interior Hall of the Helsinki Stock Exchange in Helsinki, Finland, 1965. A stock exchange is an exchange, or bourse, where stockbrokers and traders can buy and sell shares, equity stock, bonds, and other securities. Many large companies have their stocks listed on a stock exchange. This makes the stock more liquid and thus more attractive to many investors. The exchange may also act as a guarantor of settlement. These and other stocks may also be traded over the counter, OTC, that is, through a dealer. Some large companies will have their stock listed on more than one exchange in different countries, so as to attract international investors. Stock exchanges may also cover other types of securities, such as fixed-interest securities, bonds, or, less frequently, derivatives, which are more likely to be traded OTC. Trade in stock markets means the transfer, in exchange for money, of a stock or security from a seller to a buyer. This requires these two parties to agree on a price. Equities, stocks or shares, confer an ownership interest in a particular company. Participants in the stock market range from small individual stock investors to larger investors, who can be based anywhere in the world, and may include banks, insurance companies, pension funds and hedge funds. Their buy or sell orders may be executed on their behalf by a stock exchange trader. If you like the video, then like the video and subscribe the channel. And comment in the comment box on which topic you would like to see the next video.